Good morning, good evening, good afternoon, everybody. Welcome to the Finance Rebel Show. My name is Kamari Ellis. I'm your host. The Finance Rebel Show is all about helping us go to the promised land of financial independence. And we know that in order to do that, you got to be a little bit different. You got to break the molds. You got to break out of that yoke. So that's why I call myself the Finance Rebel, because I'm willing to do things a little bit differently than your average. And if you follow along with what they want the average, let's say American to do, all they want you to do is to be in debt. Can never get the wealth just by being in debt. So you got to do things just a little bit different. So in today's show, we're going to talk about a few things. All right. Financial term of the day is when we'll mess that up, rewind. Financial term of the day is when we compound interest. We're going to be covering some of the new developments over at the IRS with their new Schedule 1 release and how that's going to affect people, especially my Bitcoin owners and my virtual currency and digital currency owners. Also, we're going to talk about in our Rogue Money segment or our Rogue Advisor segment about what some preparers did down in Texas that recently got sent to prison. So, for the term of the day today, we are going to be talking about compound interest and what exactly compound interest is and why compound interest is so wonderful. So basically, compound interest is interest paid on top of your original investment and the interest that you already earned. So for example, let's say you initially put $1,000 into a bank account. That $1,000 paid you 10% interest annually. At the end of the first year, you would now have $1,100 because you made $100 in interest because you got a 10% rate of return. All right. Next year, you are again investing, but you're not just investing $1,000. You're investing the $1,100 because that's what you made at the end of year one. So we're now into year two. So at the end of year two, your $1,100 is now worth 10%. So what is 10% of $1,100? Excuse me. What is 10% of $1,100? So let's go to the calculator real quick. I want to say it's $110, but just to be on the safe side, right? It's $1,100. So you made another 110, and I did that wrong. Oops. Right. So now your investment is worth $1,210. So first year you put in $1,000. At the end of that year, you made $100. So now you have $1,100. At the end of the next year, you made $210, and you now have $1,210. So every time, as long as you keep your money in, as long as it's making 10%, it increased every time. There's a story about Ben Franklin, I tell this pretty often, how he put $1,000 away for the city of Philadelphia and $1,000 away for Boston when he died. By the time that money was pulled out, I think Philly had almost $1 billion and Boston had about $3 billion. It was something like that, something crazy, because the money just keeps growing and growing and growing and growing. It was said that Einstein called compound interest the ninth wonder of the world. It really is powerful. It's something that young folks can really take advantage of. So your newborns, your newborns, your toddlers, your teens, your preteens, all of those folks, it works really, really wonderfully well. So just imagine if you put $1,000 away for a 1-year-old, let's say making 10% a year, and when they get 20, 25, 30, they're going to have a lot of money. Just that one-time payment. But imagine if you keep putting money into that, it could really grow and grow and grow. So don't take for granted the power of compound interest in overall investing. All right. So today I wanted to talk about the new update, right? So I know a lot of people are scared. A lot of Bitcoin owners are scared. A lot of virtual and digital coin owners are scared as well, because the IRS just released this new document. Document's called the Schedule 1. The document was created from the TCJA, and what TCJA, Tax Jobs and Cuts Act, the new Trump tax bill was created. Supposedly they were going to simplify tax preparation. What they did was they just made a whole bunch of forms and they only filled out the sheet halfway. So basically they're going to kill more trees, but we kind of know that the current administration is not that friendly to the environment. So that's a whole other conversation in and of itself. But the new form the IRS just released, again, it's called the Schedule 1. And what the Schedule 1 is it lists out or details all your additional income and all your, let's say, deductions to income or adjustments to income. So it lists things like if you have a business, you'll put business income on there. If you have rental property, alimony, unemployment, those are some of the things on there that you would put. Some of the things you would also put from an adjustment standpoint, this goes against your income to reduce your income, things like an IRA payment, healthcare costs, student loan interest, things like that. So basically what they did on this form, and actually I want to show it to you all, is they put at the very, very top of the form, and I hope you all can see that clearly. There's a little checkoff box there. It says, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Again, and there's a yes or no checkbox, right? So at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? So anybody that's thinking about that kind of sounds like a trap, right? Because they want to know. Now, let me give you a little bit of context. Back in the summer, the IRS sent out letters. They sent out letters to, you know what, let me back up even further. The IRS has actually been having a legal battle with Coinbase. Coinbase is the company, or one of the many companies, but it's the biggest company that helps you do Bitcoin and virtual currency transactions. And so after a long legal battle, they were able to get the records of the people who actually owned various currency, especially Bitcoin, because they know a lot of these people don't pay taxes on their Bitcoin / virtual currency transactions. All right. So the IRS has this information. A lot of people didn't file this information. A lot of people did not report. They didn't report the income that they might have made off of their virtual currency, cryptocurrency transactions. So crypto's new, Bitcoin's new. The IRS sends out letters. I believe it was in August. They send out letters saying that, hey, if you did not report your income in previous years that you got from Bitcoin or any other digital / crypto / virtual currencies, now's the time to do an amended return. Cool. Fast forward to December. I'm guessing a lot of these people are still kind of playing chicken with the IRS. The IRS is now asking you to select a question to report if you received, exchanged, or sold any virtual currencies. Now, a lot of people think this is like a setup to get audited. I can see the argument why one would say that, but I don't think that's the case. I really think the IRS is trying to get a better handle on reconciling or figuring out who's saying they have Bitcoin and who does not, based on the records that they already have. So basically, the IRS is kind of asking you a question they already know the answer to. So my advice to you is to answer truthfully. Always answer truthfully. Always. Now, again, this could be used as a tool to promote audits and things like that. There is a mechanism for that. It's called a taxpayer advocate. So if they abuse their power, you can always go to the taxpayer advocate. And actually, and I'm talking about the IRS does this at a global top level thing or activity, right? If they use this as a mechanism to just pick on taxpayers, they're not allowed to do that, right? A lot of people are scared of the IRS. I get it. They can definitely wreck your life, but they have rules, and it pays you to either understand the rules if you have an issue with the IRS or work with people who do have an understanding of the rules with the IRS. Raising my hand. So again, if that does happen, you want to contact the taxpayer advocate if you cannot resolve it, if you cannot get any recourse on a problem by either asking for a supervisor or a territory supervisor. So, but I seriously doubt they're going to use this as a tool to pinpoint against audits because it would raise a lot of problems. They can do it on a low level, but not specifically asking about Bitcoin and other cryptocurrencies. By the way, the IRS tends to pick on poor people when it comes to audits because oftentimes people don't have the means to take care of themselves or defend themselves properly when it comes to fighting off the IRS. And we're seeing that as more of a trend. So it behooves you to put all your things in order. But back to regular programming, right? If you do own Bitcoin or you have Bitcoin or excuse me, any virtual currency transactions in the tax year 2019, just check the box yes. Just check the box yes. If you had any transactions or did anything with crypto in 2019, make sure you report it if you had a gain or a loss, right? Because you could have a loss because the IRS deems crypto as an asset. So they want you to report it just like you would if it were a stock or a real estate transaction. You have to do the same thing. All right. So, but just be honest, keep good records, and make sure that you are following your tax returns in a timely fashion. You don't want to give folks a reason to come after you. All right. So lastly, last thing for today is I wrote advisor segment. So there's a local tax preparer in Texas. So I'm going to read this. All right. Local tax preparer sentenced for fraud admitted to causing 1.3 million in losses. All right. So Janelle Leitner, who pleaded guilty in August to conspiring to defraud the government by filing false tax returns, again, filing false tax returns, causing a tax loss of more than 1.3 million, is heading to prison. A federal judge Thursday sentenced Leitner to 27 years in prison, followed by 3 years of supervised release. Charged her $100 special assessment. That's just peanut juice right there. And ordered her to pay restitution of just more than $1.3 million. That's a lot of money. Leitner worked for Waco tax preparer Stacy Anderson, the owner of Anderson Professional Tax Services, who pled guilty to conspiracy to defraud the U.S. government and to filing a false return, and admitted causing a tax loss of more than $10 million. So you had one preparer working under a business. The one preparer did about 1.3 million in tax losses or fraudulent returns. The owner did about 10 million. So they had a whole tax ring. So I bring these up, and I bring these up because I'm always running into these situations where people want me to just kind of dream up numbers. My standard line is I do not dream up numbers. What does I do not dream up numbers mean? There has to be a source or some type of documentation for all your numbers. You can do a reasonable estimate on some things that you know a client might have occurred and cost, but you can't just be willy-nilly out here claiming deductions that aren't true, claiming revenue or sales that's not true, because again, if the IRS comes through, they're checking all that, and 9 times out of 10, if they do that, you're not going to win. So I advise everybody to be truthful and honest on filing their returns. Keep good records so you can then back up your returns. That's how you bulletproof your return if you're ever audited. And there are chances you could be audited. And in order to survive an audit, like I said, bulletproof your tax returns, you want to keep good records. You want to have good documentation. And I know there are a lot of people who go to quote unquote people who get good refunds or get big refunds. Refund don't matter, folks. If you meet anybody that's telling you they're going to give you a guaranteed $5,000, $10,000, $15,000, there's something going on with them. That's illegal. And one of the things that I experienced myself, because I've lost clients to those type of people in the past, right? And you'd be surprised the people who they work with who are usually tasked to uphold the law. But that's a whole other conversation. But one rogue advisor, one rogue tax preparer, right, doing all these things, If they get found out, they typically investigate all their clients to see if there's a pattern for all their clients, right? So you can be honest, Joe, if you're going to a tax preparer who's a little shaky or believed to be a little shaky, everybody's going to get checked. Everybody is going to be, I'm not going to say harassed, but they're going to be looking at your stuff with a fine tooth comb. You don't want that stress unnecessarily. Now, I'm all for legally claiming all your income, all your profits, all your losses that you are entitled to. But I'm not for just willy-nilly creating quote unquote fake or false returns. That's bad. It's bad juju, it's bad karma. It's bad for everybody involved. So you really want to stay clear of that as much as possible. All right. So if this helped you at all today, please share, like, comment, share. Tell me what you're thinking. If you have any questions about taxes, about investments, about finance in general, feel free to text me at 484-278-1357. Again, 484-278-1357. And I'll be back. So I'm Kamari Ellis. I'm out, and I'll see you all in the next video. Have a great day.